Hello dear students, welcome to partnership account. Here we are going to discuss about a different problem related to the retirement of partner. When partner is retiring, that amount we are transferring into the loan account, means we are not paying the cash. Maybe some amount we are paying, but rest of the amount is we are transferring into the loan account. Loan account means that amount will be paid later. Presently we are treating it as liability. Confused? Say for example, C is retiring. C is retiring. As per the calculation, C has to get say 30,000 rupees. Like in the previous problem we have discussed, retiring partner will be getting cash, right? Now C is not going to get the cash. Say we have decided we'll pay 10,000 rupees to C, means C's account will say to cash 10,000. And the rest of the 20,000 we wanted to transfer it to the liability account, loans account, C's loan account. So we'll say C's loan account 20,000. So this 20,000 will be shown into the balance sheet liability. Not paying, we are transferring to the loan account. We'll show the different loan account also, and that amount will be showing into the balance sheet liability. On this basis, we'll work out retirement of partner, a big problem we'll see now. You may be surprising I am using duster. I have this duster already, but cloth I feel better. Anyway, now see the problem, it's given on the desktop. Here Ganga, Jamuna and Saraswati are partners sharing profits and losses in the ratio of 3:2:2 respectively. Their balance sheet as on 31st March 2020 was as under. What is there in the balance sheet? Cash at bank, debtors, stock, motor car, furniture, building. Everything is simple. Now liability side, trade creditors, bills payable, general reserve. General reserve will be transferred to all the partners. Profit and loss account, this is also to be transferred to all the partners, just like general reserve. Profit and loss account attached to Ganga, Yamuna, Saraswati, and capital accounts of Ganga, Yamuna, Saraswati. Simple. Okay. So here you are finding only profit and loss account. This also we got it in the previous problems in the admission of partner, right? Now coming to the adjustments, on the above date Saraswati retired from the business. Ganga and Yamuna decided to continue the business. The following were agreed among partners. First one is goodwill of the firm is valued 56,000. So goodwill account attached to Ganga, Yamuna, Saraswati in the ratio of 3:2:2. Simple. Next, stock and motor car to be depreciated. Depreciation is revaluation account debit side. Provided bad debts also revaluation account debit side. Buildings appreciation is revaluation account credit side. Trade creditors reduced, creditors are reducing means revaluation account credit side. Decreasing liability na, so revaluation account credit side. It is decided to pay 18,800 to Saraswati, as I told you 20,000, 10,000, 18,800 to Saraswati and transfer the balance in her capital account to her loan account. Rest of the amount whatever is there, that is to be transferred to the loan account. Retiring, who is the retiring? Jamuna. No, Saraswati retiring. We wanted to pay 18,800 only as cash. The rest of the amount transferring to the loan account. Loan account means later we'll pay. We'll be treating it as liability, as I have shown you in the just now before the problem. Same treatment. Now let's start the problem, and what they are asking, give necessary journal entries and ledger accounts and opening balance sheet of Ganga and Yamuna, because Saraswati retired. Now journal entries first will take goodwill of the firm is valued 56,000. Goodwill account attached to Ganga, Yamuna, Saraswati. Capital account. Goodwill, total goodwill is here 56,000. If you distribute it, how much you will get? 3:2:2. 56,000 into 3 divided by 7. 24,000. 3:2:2. 56,000 into 2 divided by 7. 16,000. So Saraswati also 16,000. So this is about distribution of goodwill. Then after that, stock and motor to be depreciated. Depreciation comes in the revaluation account debit side. All revaluation account debit side items will write here. Revaluation account debit to stock, motor car, and also PBD, provision for bad debts. Stock is here, stock and motor car is 10% depreciation. Stock 10% means 1500. Motor car is 2500, 10% on 25,000. And provide PBD is 1000. So it is 4,000, 5,000 it is. And revaluation account debit side, building. Buildings account debtor. Next, trade creditors account. Trade creditors debtor to revaluation account. Buildings are to be appreciated 15%. Buildings are 50%. 50,000. 50,000 into 15%. 7,500. 7,500 and trade creditors is to be reduced by 300. So total 7,800. Next, after that, goodwill is over, depreciation, bad debts, building appreciation, trade creditors is over. It is decided to pay 18,800 to Saraswati. 18,800 they wanted to pay to Saraswati. Means Saraswati's account debtor to cash account. Debtor to cash account 18,800. And also general reserve is there. General reserve also will distributed to general reserve debtor to Ganga, Jamuna, Saraswati. General reserve is here 28,000. 28,000 in the ratio of 3:2:2. 28,000 into 3 divided by 7. It is 12,000. In the same way, 28,000 into 2 divided by 7. 8,000, 8,000. So this is general reserve. In the same way, there is also profit and loss account. P&L account debtor to Ganga, Jamuna, Saraswati. Profit and loss account is here 14,000. 14,000 also to be distributed to the into 3 divided by 7. 6,000. In the same way, 14,000 into 2 divided by 7. 4,000, 4,000. Over. Now we'll see the revaluation account. Here only I'll try to prepare. Revaluation account debit side items are here. Stock 1500 and motor car 2,500, PBD 1000. credit side building 7,500 and total creditors 3,000. So credit side is more, it is 7,800. 7,800 minus 7,800 minus this is 4,000, 5,000. 5,000 means 2,800. 2,800 distributing to Ganga, Jamuna, Saraswati. 2,800, right? 7,800 minus 1,500 minus 2,500 minus 1,000. Yeah, 2,800. This is to be distributed in the ratio of 3:2:2 into 3 divided by 7. 1,200. There is no place I am writing here, okay. 1,200 and also 2,800 into 2 divided by 7. It is 800, 800. So this is the profit. And next we will open capital accounts. Ganga, Jamuna, Saraswati. Ink is over, I will use blue pen. So here Ganga, Jamuna, Yamuna, Saraswati opening balances first we will take by balance brought down 30, 20, 20. 30,000, 20,000 and 20,000. And apart from that goodwill 2,400, 24,000 sorry, 24,000, 16,000 and 16,000. Next after that general reserve. General reserve is 12,000, 8,000, 8,000. After general reserve P&L account. P&L account 6,000, 4,000, 4,000. Next revaluation account. Revaluation account 1,200, 800, 800. Apart from this, they said lastly it is decided to pay 18,800 to Saraswati, to cash. Saraswati is getting 18,800. Rest of the amount is to be transferred to the loan account, okay. So now we will calculate this. So this is 30,000 plus 24,000 plus 12,000 to 6,000 means 18,000 plus 1,200. 73,200. In the same way this one is here 36,000 plus this is 12,000 plus 800. It is 48,800. In the same way Saraswati is 36,000, same no? Same amount, yes, 48,800. When it comes to the carried down, we will write to the Ganga and Jamuna carried on amount only. To balance carried down 73,200, 48,800 and for Saraswati retiring, we wanted to pay 18,800 as cash, rest of the amount is transferred to the loan account, Saraswati's loan account, to Saraswati's loan account. 48,800 minus 18,800. 30,000. 30,000 we are transferring to the loan account. We can show loan account also here if you want. If you open loan account, Saraswati's loan account. Loan account is here, will be showing debit. Debit means credit side will write by Saraswati's capital account. Saraswati's capital account 30,000 and to carry down, balance carry down. Means this will appear in the balance sheet. This amount you are going to show it in the balance sheet because loan is pending. Now after this we'll open cash account. Cash account, you know that we have to start with the opening cash. So where is cash? Cash account opening balance is here 20,000. To balance brought down 20,000. Apart from that, are you finding any cash? No. But here you have cash. Debit side means credit side will take by Saraswati's account 18,800. Anything else to write? That's it. So altogether if we close the cash account means 1200 is balance carried down. This we are going to show it in the balance sheet. Now we'll open the balance sheet. We'll start with cash. Cash is 1200. Next, what else is there in cash? Cash is here 1200 and debtors. Debtors is here 30,000. There is an adjustment. What is that? PBD. PBD of 1000. It is 29,000. After debtors, stock. Stock also there is 1500. Stock value is here 15,000 minus 1500 comes to 13,500. After stock, motor car. Motor car also there is an adjustment. So motor car value is 25,000. Depreciation is 2,500. So it comes to 22,500. After motor car, furniture. There is no adjustment for furniture. Furniture value is 12,000. Next, buildings. There is an appreciation for building. Buildings is 50,000 plus appreciation of 7,500. 57,500. After buildings, anything else? Goodwill. Goodwill is created, it is there in the business only, not written off. So goodwill we can show. Goodwill is 56,000. Now coming to the liabilities, first we will take Ganga, Jamuna, capital. Capital accounts. Ganga and Jamuna. 73,200 and 48,800. And loan is there, Saraswati's loan. In fact, total 48,800. If we pay it off, it would have been 48,800 here only. But we have paid 18,800. Rest of the amount is loan. Loan will say Saraswati's loan. Saraswati's loan account 30,000. Are you clear? Very important point. Apart from this, what else is there? Creditors. Creditors, there is an adjustment, this one. Creditors amount is here 25,000 minus 300, decreasing, no, creditors is decreasing, so 24,700. Next, bills payable 15,000. And Ganga, Jamuna amount we already wrote. Now let's total up this. $73,200 plus $48,800 plus 54,700 we can take plus 15,000. It is coming to, we'll check it once again. So 24,700 and bills payable 15,000. Next, creditors 24,700. It's written. Saraswati's loan account 30,000, 73,200, 48,800. That's it. Should get 1,91,700. 73,200 plus 48,800 plus 30,000 plus 24,700 plus 15,000. 1,91,700. This is correct. So asset side, if we take 1,200 plus 29,000 plus 13,500 plus 22,500 plus 12,000 plus 57,500 plus 56,000. It is 1,91,700. Let me give you recap. Here important thing is that simple loan account they said, rest of the problem is normal. So as we have started the problem with opening the goodwill and revaluation account, debit side items we have written, credit side items we have written, and also Saraswati is going to get a cash of this much entry we have written, and good general reserve and profit and loss account. These are normal entries. After that we opened revaluation account. Revaluation account you got this much of profit. For this you can take 7th entry. 7th entry you can write revaluation account at Ganga, Jamuna, Saraswati. This 7th entry. Okay. After this what we have done, opened the capital accounts. Capital accounts, everything transferred on the credit side. Important thing remember is that cash. Saraswati is going to get this much of cash, rest of the amount is transferred to the Saraswati's loan account. Loan account means this 30,000 we are showing it as loan here. Showing it as loan, very important point, this you have to remember. And after that we opened the Saraswati's loan account also. Loan account is debit to credit we have written, and nothing to write it on the debit side, so balance carried on. Carried on means transfer to the balance sheet liability side. After that open the cash account. Cash account also we have opening cash and cash account is opening cash is this much, and Saraswati got this much of cash, so this is this one. You can write here another entry. This is 7th entry is over now, so 8th entry can be this. And also 9th entry we can write this one. How do you write 8th entry? Cash, no, Saraswati's account attached to cash account, this one. Saraswati's account attached to cash account 18,800. And 9th entry is here, Saraswati's account attached to Saraswati's loan account. Okay? Saraswati's capital account attached to Saraswati's loan account. This is 9th entry. After that open the balance sheet. Simple, all the transactions like cash, debtors, stock, motor car, furniture, building, goodwill. Please remember, when goodwill we have raised, it is not written off. When it is not written off, it has to be in the business. End of the problem, please see this. And balance sheet, simple, the carried on amount of Ganga and Jamuna we have written, Saraswati's loan account we have written, and creditors, bills payable, simple. The problem got tallied. Once or twice please check the problem before working out the balance sheet. Problem somewhere something might have gone wrong, a small mistake, forgot to write something, or calculating, pressing the calculator, all these things coolly, comfortably work out, because you are perfect. You know how to work out the problem. Have that confidence and work out it. Dear students, lot of subjects already are prepared. It's not so easy to prepare so many subjects by taking so much of time and energy, but I am preparing for you all. Please check it out, the previous recorded subjects and also topics in the description box or playlist. Find out what is useful for you, use it, and also don't forget to forward these videos to others. Let them to take the benefit, let them to feel studies is easy. Okay, so stay blessed, practice well, have a wonderful future. Good luck.